Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 22nd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please take a moment to read over this disclaimer as it says that everything I talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. We are here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. I said earlier, it is a light week. Not as light as last week, but it is still a light week for economic data. Across the pond, really not a whole lot to be seen there. Canadian wholesale sales came in at 1.1%, expected to be 0.8%, and they revised last month's number up slightly by 0.4 of a point. So a little bit better than expected on that front. Here in the United States, we got Richmond Fed came in at 16, expected to be 9. That number much better than expected. We're seeing a pattern here with these manufacturing indexes. Richmond Fed, Chicago, what is the other one? Empire State. All of those are coming out with pretty good economic data points, which is a good sign going forward anyway. All right, looking at the overall markets now. Let's look at crude oil. Up about 36 cents, still in that 72 handle. It's really trending nicely right along the midpoint of my trend channel here. It does look like it's getting a little toppy there. We'll have to see how it goes later on in the week, but that's not really a great setup right there, but it is something to keep an eye on for sure. Then on to gold futures. We've been talking about this for several days, looking like it's really starting to build a nice bottom, especially with yesterday's market move. Today, not really much of a confirmation. We settle up in here near the highs of where we're seeing now. That would very much look like a bottom confirmation, and for a rally, at least to test the 200-day, I would think. Not out of the woods yet, but still really looking like a very nice bottom there in the gold futures. Bitcoin starting to lose a little bit of steam. It settled above the 50-day moving average yesterday, but now today it is below that number. Nothing to really get too upset about if you are a Bitcoin bull. The fact of the matter is it's right here at the point of control. It's very comfortable there. It's going to be hard to get out of this little tight area here. But if it does, I'm expecting it to, like I said, many times, like a broken record, 58.80 in Bitcoin before we can really resume any type of bullish market action, I think, in Bitcoin right now. Unless some crazy news comes out, but as it stands, I think it's a little bit priced in. Then bonds, they don't have a whole lot of room to go. They pretty much priced in the next couple of moves, worrying about an inversion. We start seeing that inversion. That's basically the market signaling the Fed they are looking to overdo the interest rate hikes. VIX, a little bit of a mixed bag with the overall equities kind of mixed. We've got the Dow Jones Industrial Average off by about 12 points, really unchanged for the Dow Jones for the most part. NASDAQ up 10 points, again, pretty close to unchanged. And E-mini S&Ps up about 5 points. Like I said, very quiet day. E-mini S&Ps definitely need to get through this Fibonacci extension level of 61%. That hasn't been done yet, and as a matter of fact, we're trying to bump up against it a couple of times. So that is a solid resistance area that we'll have to keep an eye on. We've got the E-mini S&Ps on the 30-minute candles here. Right off the open, we saw a little bit of correction happening. The market started selling off heading into the open, maybe trying to get rid of some of that overnight long inventory. It really wasn't that long, but a couple of days built up on the long side, I suppose, and they're trying to flush it out right off the bat. And now we're starting to resume that move higher. So I'm pretty much bullish equities, which hasn't been for quite some time. That being said, makes me a little nervous about the downside. A couple of things I'm going to be looking at today for earnings is lows. I'm going to be looking for lows to play to the upside. The other one is Target. I'm going to probably play Target to the upside as well. We're starting to see some of these retailers do very well. They have been giving up bad forward guidance, but the economic data isn't jiving with what they're saying to me. The economic data is showing that we're continuing to steam forward. We're not seeing a whole lot of recessionary stuff or pullback in the economy from the consumer standpoint. I think that this is more of a bluff for some of these guys to get their stock cheap, and that's why they're giving forward guidance bad to scoop it up. But I think that both of these two companies, especially with construction spending for Lowe's, things of that nature, new housing, Lowe's is going to do well for that. Target, consumers doing well there is also, with the retailers going back into the market. This is showing the core retailers actually starting making it back in. So that I think is going to play to the upside as well. All right, yesterday I talked about this in Cummings, ticker symbol CMI, that I decided to cover this trade yesterday. I put it on to work to get out of yesterday and got hit on it late in the day. And in CMI, I had on the June that expire, on the 15th. Sold the June 55 puts in there for 45 cents, for 55 cents, bought them back for 25 cents yesterday. And then off of that, sorry about that, CMI, I went into the June, sold the 135 puts, for 55 cents, bought them back for 25 cents yesterday. And then with StarBucks, I also talked about working to get out of this when I was trying for about 17 cents. As you can see, for the rest of the day, the market just kind of slowly sold off. Today, continuation of that sell-off, so not looking too good now that it's gotten below this 38 Fibonacci level here. It is at the point of control, but decided to take my money and run. With that being said, I had this both in my IRA and in my margin account. Let's talk about the margin account real quick. And in StarBucks, ticker symbol SBUX, I went into the June, sold those 55 puts for 50 cents, bought them back for 25 cents yesterday. And then my IRA, I had on the same June 55 puts that I was short, but I defined the risk by buying the 45 puts just to kind of create that synthetic naked short. That 45 puts I basically bought for a nickel, left those on, just covered the June 55 puts in there. Originally sold the whole package for 45 cents, bought those back for 25 cents this morning. So a little bit of money there after commissions and everything else. It's not that great of a winner, but winner nonetheless. So took both of those off. Haven't added anything today because I'm going to be, like I said, looking at Lowe's and Target for earnings. So jamming up my margin account for that. I'm not going to probably add anything. Nothing really stuck out to me right now, but going to definitely be playing those. So follow me on Twitter at Wolfman's blog because I'll be tweeting out what I do there. Also, Thursday, we're going to be doing the webinars now on Thursday. And this Thursday, we are going to be doing it on diagonals. So I'm going to show you how to create a diagonal to increase your probabilities of success. We're going to show you how to basically sell a call in order to finance the extrinsic value. Now, what does all that mean? Well, extrinsic value is one of those things that we really need to be conscious of, especially when we are getting long options. And I'm going to show you how to take care of that problem in Thursday's webinar. So go check it out at protraderstrategies.com. Also, give me a like or dislike. If you give me a dislike, let me know what I'm doing wrong. Also, let me know what I'm doing right, all right? What you like about these daily market commentaries. That's about it. If you can't take that, take it easy.